Contrary to popular belief, a balanced portfolio is not 50% in stocks and 50% in bonds. It is also not 60% in stocks and 40% in bonds. These portfolios are not actually balanced and they will not protect you from a financial meltdown. Expecting these to protect you is like expecting a sock to protect you from STDs. It just will not happen. Why? Ray Dalio, one of the most successful investors of all time, has the perfect answer for that. First of all, let's define what exactly a traditional balanced portfolio is. A traditional balanced portfolio is a group of investments that try to grow your money cautiously. It is usually made up of stocks, bonds, and cash, but can include alternative investments like private equity and real estate. Depending on things like your needs, goals, and risk tolerance, the portfolio will usually follow these ratios. 50% in stocks, 50% in bonds, 60% in stocks, 40% in bonds, 70% in stocks, 30% in bonds. Usually the younger you are and the more risk you're willing to take, the more you will have in stocks. For example, a 70-30. Then as you age, you will shift to having less in stocks and more in bonds, such as a 50-50. According to Dalio, whose investment firm manages over $120 billion, the problem with these portfolios is that they do well during good times and bad during bad times. So their strategy basically translates to, I hope things go up. Specifically, there are three hopes for these portfolios. 1. We hope stocks will do well. 2. We hope bonds will do well. 3. When a crash comes, we hope both don't go down at the same time because stocks and bonds supposedly move in opposite directions. However, there were many instances when both stocks and bonds took a dive. So what happens when we don't get what we hoped for? The portfolios collapse and send us on an unforgettable roller coaster ride, like what happened in 1987, 2008, and 2022. I mean, just look at these numbers. 1987 Black Monday crash, 22% drop. 2008 financial crisis, 36% drop. 2022 market decline, another 22% drop. Is this what you would call balanced? After these onslaughts, people asked, what the hell had happened? The answer they got? This just hasn't happened before. But it has. If you're naive enough to believe that we will never get another crash again, I've got news for you. We have over 200 years of history that says otherwise. It's never a matter of will there be another one, but when and how can you prepare for it? Do you ever ask, will there be another winter? No, of course not. You know it always comes. The same applies to economic winters. We don't know the exact day that winter will come, but we do know that it will come. If you're young and have time to recover from these crazy drops, that's fine. But if you're in your retirement years, taking those big hits will surely set your heart rate monitor off. Therefore, we need a new and improved solution, a real balanced portfolio that will protect you and do well in any environment. But first, we have to figure out what was wrong with these supposedly balanced portfolios. The problem, according to Dalio, is that these portfolios aren't really balanced. Even though they might be balanced in dollar amounts, they are imbalanced in risk. Stocks are 3 times more risky than bonds. When you have a 50-50 balanced portfolio, most of your portfolio risk is actually from your stocks. Specifically, 95% of the risk is in stocks and 5% in bonds. So when stocks fall, your whole portfolio falls. To truly have a balanced portfolio, you must divide your money up based on risk, not just the money amounts. If you're enjoying this video so far and finding it helpful, make sure to hit that like and subscribe button down below. Every investment has a season it thrives in and does bad in, so you want to plan for all the potential seasons. Dalio says there are 4 potential economic seasons: rising economic growth, falling economic growth, inflation, and deflation. How would you build a portfolio with this in mind? He has the perfect answer. He has created a portfolio that not only limits how much and how often you lose money, but also gives almost stock-like returns. If you want to learn from the billionaire investor, this next video will break down Ray Dalio's famous all seasons portfolio.